decade. It happened 96 to 2002 or 98 to 2002. It happened during 88 to 92. It has happened in the 70s. So you see, these are all part of a normal thing. Now, there is no quick fix. You simply have to wait it out.
How can you call this normal?
Whether some administrative or policy, it is normal in a long-term sense. Madam, surely you cannot be expecting the economy, all economies of the world, to grow at 8% forever and ever. There is bound to be a downturn. It's just bad luck that it happens to have fallen off rather more sharply in India than it should have. Some of it, or a large part of it. Of course it's self-inflicted. Of course, politics is self-inflicted.
Okay, so can the government be excused just because of the political environment is now the question that we'd like to debate on the show. The government has talked about a global downturn as an excuse for the longest time. Then we heard the entire coalition dharma with allies not being allowed, allies not allowing decisions to take place, the CAG reports on a string of scams being a distraction, and yet again now Parliament being held up. Are these excuses acceptable for things not moving forward and for the business environment deteriorating? Mr. Bhede, to you first.
It's very difficult to say that this is the absolute correlation and causes the downturn. I think all of us have learned that scams exist in all parts of a political firmament. Maybe as of now somebody thinks Colgate is more important, but we've been having it all the time. The problem in India seems to be, do we affix responsibility and attune for it? Now, as far as the environment is concerned for business, I think the correlation between politicians and businessmen is far better than any other correlation.
Okay.
So, if you have a bad political situation, I think industry would know it better than anyone else. Number two, I don't think the best environment makes big business invest in India. They invest where they have a better return. Let's be very clear, that's a business decision, they will take it. Now, that does not mean we cannot create a better environment. Let's look at it from that perspective. Three, I think we should also look at what post-2008 has been driving India's growth. It has been the rural demand.
Right.
And I don't think that's where our big industry operates so much. It has been the SME sector. I'm not talking the government SME sector, but the real small entrepreneur who has technology and a product which he is able to push. Now, fortunately, unfortunately, he has a double whammy. The foreign exchange movements of the last 12, 18 months has hit him hard. He's now recovering, he's taking cover and trying to come back from that. And secondly, the interest rates. Now, interest rates, as long as we are in this vicious cycle of inflation, I don't see it coming out. But let's be a little less doomsday forecasters. We seem to be doing it all the time. Some months back, we were all worried we were in a severe drought. We were having a kind of drought which was not there. And I think all of you were bashing the government for doing nothing and hoping that, we'll now not even see 4% growth in the next quarter. Am I right?
We didn't get down to 4%, but there were economists who were talking about it, and that worry still continues. We've seen a better than expected monsoon.
Well,
yes.
Right. That's the point. So maybe that will ease the inflationary pressure to some extent.
Okay.
So let's see if September rains come as they are expected to, and I'm saying expected because that's what IMD said, though somebody has written today in the press that you should wind up the IMD and bring in private sector. I don't know whether they have a better model. I've seen 100 years forecasting by IMD, which is not too bad. Now, if these things fall into place, the pressure on price will relax, which will enable RBI to possibly relook at certain
rates.
Now, I worked with Mr. Chidambaram, but all of you seem to be thinking he's got a magic wand and he'll solve everything. This country doesn't have simple fixed solutions. Let's remember each decision has ramifications. That is where I come in with nano management. You have to be very careful of how you attune your decisions. So let's give him time. I'm sure he'll try and fix it. But please remember, when you look at impetus, we always look at some concessions to come in on the informal taxes. Indirect taxes.
I don't think that's what the industry is asking for.
That has also been one of the demand at some point of time. But now the options are limited in that. We've already modified our system downwards.
Respond to that and also the correlation between business and politics.
Well, I think that to respond to the earlier point that TCA was making, I think that a lot of us have seen the fact that we were heading into a downturn. It's, you know, it's not that this was unforeseen. I think for, you know, similar talk shows, discussions, etc., people have been writing about it, talking about it for the last at least 1.5 to 2 years, that we are getting into a macroeconomically bad scenario, and at some point that will result in GDP growth numbers. And if we just go back to last quarter's GDP growth numbers when they came out,
right,
there was such a huge amount of shock,
right,
that we were actually at 5.3%.
And that
right?
shock is missing
and
today
now,
is the worry.
No, that's exactly the point. And now we're at 5.5, but it's now baked into the system.
Right.
Policymakers are apologizing, not even apologizing, they're saying that it's going up, it's not bad. You know, some people are saying it's a business cycle, the whole world is in this whole situation, so what's so bad about it, right? And that is actually very worrisome, because just literally 6 months, a year ago, the same numbers were actually shocking all of us, right?
Right.
And now it's actually, what's the big deal about it, right? So I think that, you know, something, you know, we just continuously ratcheting our expectations downwards. I think that's very dangerous. And I actually belong in the Sajid Chinoy camp when he says that, you know, we can actually, if we just continue at the same trend
it
scenario,
could be a free fall.
it could actually go much worse, because, you know, when you look at the reality of the situation right now, investments are not really happening. Credit offtake is going to start going, is actually already going down. Banks report that they don't really have any large-scale offtake proposals coming up. You know, in various sector after sectors, people who made whatever investments they have, nobody's thinking about making any new investments. So where is the growth impetus going to come from?
Kiran Shaw, I know you've been wanting to make a point. Please go ahead, and also a quick response to some of the points that have been raised here. Are we doing nano analysis? Are we criticizing too much? But my question is, if we do not do it now, when is the time to do it? And as Sumant was rightly saying, that the irony is that even a 5.5 doesn't shock us anymore.
Look, Shweta, first and foremost, there was another statistic I wanted to mention, and that was there is a serious rise in the net non-performing assets. There's a lot of restructuring going on in public sector banks. That is another signal that the so-called SME sector and the other mid-sized sector is not doing well. So I wanted to just, you know, comment on one of the earlier comments made about the fact that, you know, rural consumption is what has been driving this country's growth. I think we have to look at various aspects. When it comes to nano management, I think it's not about nano management. All that we want are decisions. All that we want is implementation. All that we want are approvals. We are not getting any of these. It's a standstill situation, Shweta. Believe me, it is very frustrating, and a lot can be done to give us the impetus. And I can tell you that there is much more growth potential left in Indian industry, in the manufacturing sector, but government has to wake up. Government has to act. Without decision making, without approvals, without investment in infrastructure, believe me, nothing is going to happen. So no amount of, you know, rhetoric and sweet talking is going to help this economy.
Okay, Sajid, a quick word from you on interest rates, because first I'm going to get Mr. Bhide to respond to the SME point and the rural story.
In what I said about the SME, the point I have made is what has led to the NPAs.
Right.
There was a double whammy this summer. Now, the other point I want to just mention, in terms of NPAs, the larger sector or the big industries have a much larger chunk of resources lying there, and which normally succeeds in getting restructured. The concessions they gain from the political system are far larger than any of the others they can get. I think Dr. Venugopal Reddy said so in a conference the other day somewhere, that what the SME sector wants is write-offs like the bigger ones get. So, I mean, I'd look at these figures with a lot of, caution.
Would you like to respond to that, ma'am, very quickly before I move on to the other point?
No, I've just been saying whatever the situation is, whether it is the question that we are not seeing good performance from any of the sectors, or whether it's the large sector not or getting its debt restructured, that's not the issue. The issue is, why has growth come to a standstill? There is opportunities of growth. There are growth opportunities. There is capacity building opportunities. But why is no investment going into that? because there is a stalemate. Let's accept that. And I think government has to accept that. And if government is constantly going to be in denial, and if government is constantly going to say the rest of the world is slowing down, so it's fine that India slows down, we can never have any aspirations of inclusive economic development. You're going to create a much larger number of poorer people in this country. Savings rate, as you know, are at their lowest. So, you know, what are we talking about?
Okay, Sergeant Chinoy, we often try to understand the reasons for this slowdown, which, as you believe, seems to be intensifying, or at least is persisting. And many industry leaders always point to the high interest rate environment. I know you belong to the camp where you believe that lowering interest rates will not help growth. Explain to us why you say so, because Mr. Bhide at least raised a point here that he believes that with the monsoon now looking better than expected, inflation pressures are going to ease off, and that may give the RBI some room to cut rates. Do you see that happening, and will that help?
Well, I don't see that happening, and I'm not sure it'll help, for the very simple reason that real interest rates in India today are exactly at the level they were between 2004 and 2008. Remember, those were the 4 years in which industry and investment were booming in double digits year after year after year. So clearly it cannot be the case that real interest rates in India today are prohibitively high and are blocking investment off. Now, there are real dangers from premature monetary easing. Let me tell you two of them at least. We know that there are a lot of implementation bottlenecks on the ground in terms of investment and creation of new capacity. So if you cut interest rates, what you will perhaps not do is to stimulate more investment, because you will not alleviate these other constraints. But what you will do is perhaps cause interest durable consumption to rise and further exacerbate inflationary pressures. There's been repeated mention about savings rates falling. So think about why household financial savings have fallen over the last 2-3 years. Because inflation has been stubbornly high, interest rates did not rise fast enough in time, so households got negative and low real rates of returns on financial assets and made a perfectly rational choice and bought more gold, for example, which further exacerbated a current account deficit. So there are real risks from premature easing of interest rates when that's not the central reason why investment and activity has slowed down, and frankly it's irresponsible to be cutting rates when your CPI inflation is in double digits.
Mr. Bhide, respond to that very quickly. It would be irresponsible on part of the RBI to cut rates.
I think the last 2 months
you're banking on it, actually.
You've been seeing changes in the inflation. It has stopped rising. The double-digit inflation has reduced. The last 2 months have had fairly good figures on inflation.
So you think the RBI should consider a rate cut?
Look, can. I have not said they should.
If inflation eases a bit, and given the growth number.
It depends. You see, again, this quarter you're not going to have a very good growth. For the simple reason, rains will have flooded places, your mining sector will again suffer, construction will suffer, it will slow down, cement demand is already going down for this quarter. So I don't see, but if the agricultural produce comes through, the pressure on food products might ease. That is essentially the vegetables and consumables. If that happens, maybe you are looking at something.
Are interest rates a factor, really, Sumant? A very quick word from you.
No, I think they certainly are, because from an investment standpoint, and I'm not getting to the household savings issue here, but certainly from an investment standpoint, with interest rates at 12 to 14%, hardly any project makes any sense, especially when your top lines are getting, forecasts are getting compressed because your GDP growth is coming down. So your top line growth levels are coming down. And if your interest rates are at 13, 14%, then frankly speaking, at this point in time, nobody's going to put any rupees to work. And so therefore, I hear what Sajid is saying. At the same time, I think you have to sort of break this circle somewhere. And one of those places could be lower interest rates, which then to some extent kickstart investments and get at least the productive side of the economy going. So I think I would beg to differ on that. I think that we do need to have lower interest rates going forward to actually propel growth, because that is really one of the only levers that we have at this point. I don't see the fiscal deficit coming down this year to 5.2%, which is the target, or 5.1. It's probably going to end up being higher than that. I don't see any massive administrative policies, reforms taking place. And I think as industry, we should actually be prepared that this is the way things are going to be for the next 1 or 2 years, because given the political situation, given the elections that are coming up at this point in time, I don't see that there is going to be any fundamental change in the way the political economic sort of decision making is happening in India. So I think we should all just accept that, and within the context and framework of that, just make whatever plans we think are best for our respective businesses.
And that's in fact a very worrying trend, Sumant, if I could say that, because again, it's an acceptance now coming on part of the industry also. You yourself were saying that it's an acceptance on part of the policy makers.
Shweta, we've been sitting here and criticizing,
Nothing's
right? And we're still criticizing, but nothing has happened. So I think the smarter thing to do at this point in time is just to accept the reality that this is the way it's going to be. If at the margin you can get a few little softs here and there, like lower interest rates, then at least let's try to go for that.
That's just bonus.
You guys sound like bureaucrats.
That's what I'm saying. You were just criticizing the bureaucrats and policymakers for accepting it, and you seem to be doing the same.
But look, I guess in a sense the whole country is sort of getting down to that same level of inactivity at this point.
All right, so what's the best case and worst case scenario really for the Indian economy going forward? That's something we'll discuss after the break, and also a quick word from all our panelists as to whether there is a magic wand or anything out there that the government can do to change things really. That's coming up after a short break. Welcome back here with We Mean Business. Dr. Rajiv Kumar, Secretary General of FICCI, also now joins us as part of the show. Dr. Rajiv Kumar, we've had a very interesting discussion trying to understand the causes of the slowdown, whether we're going to see a reversal, but we're now trying to understand the best case and worst case scenario both for this fiscal as well as going forward. Looking at the 5.5% first quarter GDP number, what's your assessment? How bad can it really get for this fiscal? Are we even going to clock 6% this year?
Maybe we should talk about how good it could become.
Okay, let's start with the good
Let's
first.
start with that and, and then to lay out a scenario that soon after the parliamentary session, the government announces some far-reaching reforms, measures. One, to control the fiscal deficit, which they can do by targeting at some subsidies which are politically feasible, and they might. Given
the political environment, are you hopeful on that one?
I think so, because
the standoff that we're seeing right now has seen a deteriorating environment.
These are actions which don't require parliamentary approval, and the government can say this couldn't get worse, so therefore I'm prepared to bite the bullet and therefore hike the diesel prices, for example.
Okay.
And let the petrol prices also go up, etc. And then look at other subsidies, take care of the fiscal deficit to avoid the downgrade that is looming right there.
Right.
If the downgrade happens, then all bets are off, in some sense. So if the finance minister does that, and the commerce minister says that, look, we will do the FDI in retail and civil aviation, the Cabinet Committee on Economic Affairs has already considered the latter. So if all those steps are taken, what would happen is that the second quarter will not be so good, because that will continue the fall. But the third and fourth
is where we can see the upside.
Could actually see going up to 6.57, and therefore you could get around 6.34. I don't think 6.7, but
6.34 is according to you the best case number.
The recovery would begin, and then we'll be on the upward path. So that's the best case scenario. The worst case, of course, is a free fall pretty much. Because now the gross capital fixed formation is stagnant. Some of the leading indicators like the cargo handling at ports and airports, and also the heavy commercial vehicle sales in July and August are all down. These are really leading indicators, and they are showing a sharp decline. So if this doesn't happen, the bottom could fall out of the situation.
Mr. Raghavan, a very narrow political window out there to actually go ahead and implement those reforms, as Dr. Rajiv Kumar was telling us here. And also, do you share that optimism? Do you think the government will have the political muscle, especially given the turn of events over the last few days, the standoff that we've seen over the coal issue, the deteriorating relationship really between the government and the BJP?
No, the short answer is no. Why shouldn't the BJP allow the government any room whatsoever? And in any case, even as Rajiv was just saying, and Pradeep was also saying, if these things are not, there are a lot of things which the government can do actually without having to worry about the parliament. So why don't they do that? Well, I'll tell you what the problem is, to my mind at least, that the center of gravity of the economy, decision making, etc., has shifted from the center to the states. It's not the center so much that has to do a lot. It is the state governments which have to get their act together. As someone said earlier, some of the states are doing very well. You have to ask, why are they doing well? You also have to ask, why are some of the other states not doing well? Now, what is it that the center can do, say, for infrastructure investment in Maharashtra or in any other part of the country? Why is it that in Bihar, road building is taking off? Why is it not taking off in Karnataka? So I think, taking aim at the central government, it's a good thing. They should be shot at from time to time. But really the focus should be on the state governments, because that's where the problem lies. Now, the difficulty is that on television shows, you can't be shooting at 27 states. So the central government is an easy target. Honestly, over the last 6 months, in whatever interactions I've had in the finance ministry, I have told them that, look, why don't you draw up a list of 20 things that you will do, or 15 things that you will do over the next 3 months that will give, change the business mood and so on. Believe me, out of the 15 or 14 actually recommendations that we discussed, fully 11 fell within the purview of the state governments. Broadly, land, electricity and water. Now, this is something which everybody knows, but what can the central government do about things which are state subjects, about which they have no control? FDI in retail, okay, you do it. FDI, Rajiv said, you do, FDI in civil aviation. It will save Vijay Mallya. What's it going to do for your GDP? What is it going to do to pick up the production in the real sector?
Okay, I'm going to get Dr. Kumar to respond to that, because he believes that it can turn the sentiment around. Dr. Kumar.
He says what it will do is not bring GDP growth up, but it will turn the investor sentiment around. And that is the critical thing, because you see the way we have to go forward if we got to get GDP growth up is to get the investment, private investment going up. And that is where announcements like the FDI, the announcements like, for example, reduction in MAT or an increase in investment allowance or depreciation allowance, all of which are eminently feasible, or even putting some money out of EPFO into the equities, in the equity market to get the market cap up, all of that are just intended for improving the investor sentiment, which will then have the effect in the third and the fourth quarter.
Sergeant Chinoy, how real is the threat of a downgrade, a rating downgrade coming from rating agencies? Because that, as many of you have actually said here on this show earlier as well, is really going to be the last straw, and we're going to just see the downward spiral